Hello and welcome to India Market Open. I'm Samina Nalwala. Myself, Niraj and Tamanna will gear you up for trade this morning. It looks like it's been a good run. 2 straight days of gains on D Street. The Nifty closed about 22,300 and it seems like a positive handover from Wall Street will cheer our traders up this morning. Bulls in control for now. Of course, the VIX has also eased off, which gives us some more comfort, and the PCR trades about 1%, clearly showing that the bias is on the upside. Across Asia, the markets look okay. Japan has eased off a little bit in the last few minutes, but barring China, every other market across Asia is actually looking good. Crude also trades around $87 a barrel. So, Niraj, the setup is actually pretty good. We've had 2 straight days of gains. This morning, it's a positive handover. It could seem like we will attempt taking out 22,400, but the second half of trade could potentially see some profit taking. What I am betting on.
Yeah, and any reason why?
RIL is the big daddy.
RIL is the big daddy. It's a bit of results. But yeah, I'm just trying to understand. Any reason why you think that they're going to be short?
I just feel like if we've had 2 good days and if we are leading the way up in terms of global cues, remember, Dow hasn't done well in the last 6 days. Asia as well started off much better this morning. And in the last hour or so, it's given up some gains. Japan especially, it saw a gap up, but sold off as we see it. The Japanese yen, interestingly, also stands at the 34-year low. China is not looking too great this morning. But I just feel like because we've had such a solid pullback, a little bit of profit taking cannot be ruled out at levels of 22,400, 500.
Interesting. Yeah, sure. So that's a valid point too. But just a few updates here. So one, if you just look at what's happened, a 6-day losing streak for the S&P 500 snapped with what the Dow and the S&P did in particular. So that is one good thing. Oil is steady after Iran has said that it will not escalate the conflict with Israel. Interestingly, crypto prices have gained after the Bitcoin halving incident is behind us. And amongst other things, there is a Nomura note today. Before we get to trade setup, of course, there is a Nomura note today which says that they expect Indian GDP to grow at 7% for the next 5 years. So pretty strong showing out there for most things as well. But as things stand, let's take a look at the trade setup for the day today. And it could be an interesting morning. So the point remains that yesterday we saw a bit of a higher high, higher low formation on a trending day. Typically, people say that such a setup would suggest more upsides for the markets because we almost close at the high point of the day and then therefore a trending day and much better technical formation as well. The other aspect was that the major call writing that happened at the 22,600 strike. It just showed that people who are wanting to bet against the tide as well are keeping a cushion. So 23,000, very high call concentration, and new writing or new addition happened at 22,600, not at 22,400, not at 22,500, at 22,600, keeping a buffer, which shows that the immediate point of resistance as well from the option side is straight at 22,600, so some distance away. And pointless to talk about specific sectors per se because it was a rising tide, carried all boats along with it except for HDFC Bank, if you will. But capital market stocks did stand out, and I thought that was an interesting pocket of trade. And guys, one very interesting excerpt that came in from amongst the brokerage notes on a particular sector. So I was looking at the City note, wherein they did a roadshow for some 30 or 40 Asia Pacific clients. And amongst the various sectors that they've written a note on, they said that Adani Ports is their top idea, L&T looks okay, some other looks okay. But property, they say that there was general discomfort on residential developer valuations, but given strong pre-sales, we sensed reluctance to reduce exposure, which means that maybe selling is not coming, even if people believe that the valuations at that residential real estate end might be expensive in select cases.
So it's a dream that everyone wants to bet on right now, because it has moved up so robustly, and the pre-sales figures at the end of the day, if you have people coming in, why not? Absolutely, that's a big one. I just want to go back for a second to the global setup because there's just so many things to look forward to, and housing sales in the US is one of them. So world over, a big factor over there. But like Niraj said, you've had a rebound after 6 trading sessions in the US, and that's important because the mood definitely has changed. Look at the big sort of clouds in the horizon, Fed rates being extended, that has been shrugged off. Nvidia roared back up about 4 to 6% actually in trade overnight. So you've had sort of a great and very clear shift there. Everyone's going to be watching the mega cap results coming in, starting with a Tesla. And Tesla is really hurting. Maybe on hindsight, a good thing that Elon Musk took a couple of days to take care of his business instead of his India visit, because he's had to cut prices in more countries as far as Tesla is concerned. But Tesla, Meta, Alphabet, Microsoft, all of those results are due this week. The 10-year yield did not move too much, steady at about 4.6%, because inflation data later this week will be core in deciding where that goes. And, crude prices also cooling off. Once again, the question of what is the inherent next trigger for crude if you can see such a pullback in just a couple of days. I want to just pull up Asia, and Asia is looking like, a mixed trade as far as Shanghai is concerned, but overall not too bad. Our implied open is also showing that you might start in the green today, not with the big gains of yesterday, but definitely overall a positive mood. Quick look at the fund flows, and DIIs bought about 3,500 crores yesterday. FI sold 2,900 crores. But remember, you had a good day. Samina, the big one, of course, in terms of stocks would be Reliance to watch out for after the results yesterday. And overall, better than what the street expected, except for retail, I would say.
Slightly better. And the brokerages seem quite enthused. But very quickly, while we were talking about other asset classes, a quick word on gold. And I think this is important because it gives you a sense of risk aversion worldwide. Gold prices are off about 2% in overnight trade, which clearly means that there is easing risk aversion, and risk on could very categorically be back on the street. Like we've discussed, the global cues are looking good. Implied Nifty is off to a positive start. There will be some more buying that's expected in the early hours of trade today, but in order to conclusively say that the market leg down is done with, we will have to build on those gains that we've seen over the last 2 days of trade. That's pretty much what the broader setup looks like, but Big Daddy RIL has reported numbers largely in line with expectations, a marginal upbeat to say the least. The ONC business is the clear driver for Reliance Industries. The stock may not see very sharp moves in today's day of trade. Remember, it is a big one. And if we do see, you may get a slight gap up, but whether or not it has a big rally is anybody's guess. We will try and understand from analysts over the course of the next 2 hours whether there's any trading opportunity for traders on RL this morning. Well, in terms of earnings, their revenues were up 5.6% Q on Q. Operating profits were up 4.6%. Operating margin stood at 18% versus 18.06%. The board has also recommended a dividend of 10 rupees a share. In terms of a segment-wise breakdown, oil to chemicals revenues were flat, up about 1%. Higher revenue was backed by better realizations for petrol and diesel. EBITDA came in at 19.3%. Driven by a sharp rebound in gasoline cracks and strong results despite challenging margin improvement. Fuel cracks fell about 20 to 25%. In terms of what brokerages believe, Nuvama maintains a buy with a 3,500 rupees target price. You've also got a couple of the other ones, like Centrum, that continue to remain constructive on RIL. So good numbers. A couple of standouts. ONC is the one that has actually driven earnings for this one in this quarter. Well, apart from that...
Samina, just one thing. I just thought that most of the notes summations seem to be that while the balance sheet is improving and all of that, a tariff hike is necessary for Reliance to make the next move. It seemed to be the case. So one is this whole listing of newer businesses that will happen, whether it's geo platforms or retail, but two, a tariff hike on the anvil. And I wonder if indeed that is the driving force for Reliance as well. And if we indeed look at a tariff hike,
for the sector.
Yeah, for the sector, what happens to a Bharti and a Vodafone? Yeah. We'll talk about telecom in detail, but I thought most notes said that tariff hike very necessary.
In fact, saying that the lion's share of the push-up for Reliance is going to come from a geo because of those tariff hikes. I don't know. The optimism for those tariff hikes is... I don't know, maybe a bit misplaced. I'm not sure if there's going to come to that extent. I've been hearing about it for a while. What happens if they don't come in? Then becomes the scary sort of situation.
Indeed, it's definitely not going to work for the likes of a Vodafone. At least that's what we know, because they've been losing market share. So even if you have an increase in hikes, counters like Vodafone may not stand to benefit too much. Apart from that, two others that I seem to have got drawn to is Hudson Agro. I mean, those numbers are very impressive, to say the least. Revenues were up 14.4%. to come in at 2,047 crores. So that's a good set of numbers coming in from them versus 1,789 crores. EBITDA was up 47% at 230 crores. Margins have also improved substantially, 11.21% versus 8.74%. And net profit is up a whopping over 100% to report at 52 crores versus 24.98 crores. We will connect with Hudson Agro at some point in the day to get a sense of what drove the numbers and what's the outlook for the company going ahead as well. Along with that, it's been a disappointing quarter for the likes of Mahindra Logistics. Once again, a disappointing quarter. They've had a very subdued year. In fact, they do have a glide path to 10,000 crores for FY26, but nowhere close to it for now in terms of Mahindra Logistics. While the revenues have come in higher by 14%, EBITDA once again is down 11.5%. Margins continue to compress, so they were standing at 5% in the same quarter last year. This time around, coming in close to 4%. Express Logistics has been the pain point for Mahindra Logistics, and remember, while you are seeing margins not looking too bad in the other businesses, it's a tough one. Like the way we see it. Well, they've also reported a net loss at 12.85 crores versus a loss of about 0.8 crores in the previous quarter. So it's tough. They've recommended, interestingly, a final dividend. But what lies ahead for Mahindra Logistics will be interesting to note, whether or not things are looking up for the company as we enter into FY25. But yeah, this year has been very, very rough. No surprises there.
You know, in terms of numbers to watch out for, I would look at a Tata Consumer. For one, the stock closed pretty decently yesterday as well. And though that entire pack is fairly muted, look at the kind of run-up Tata Consumer had yesterday. It's up 3% ahead of numbers. So suffice to say, what is being expected? Revenues and margins expansions are being expected. The estimates which we've put together are expected to grow with revenues of 10% upwards. EBITDA is expected to grow 20% year on year. Margins at 15.3%. So you could expect pretty decent numbers from a Tata Consumer. Net profits also expected to grow 28%. Easing raw materials could help them this quarter. And even though the rural demand languishing sort of story continues, but Tata Consumer seems relatively decently placed. So that's one that I would definitely watch out for. You've already seen an up move yesterday. Vodafone, you finally know the price that is out, 11 rupees. Is what has been finalized. It was subscribed finally about 6.5%. The retail investors, after they pegged it to 11 rupee price band, that segment also did finally get subscribed fully once. We'll wait and see what happens in the stock today and whether there's a further downside. Remember, the last 3 sessions, Vodafone has been closing down. Even as the IPO has been on. Tejas Network is another one that I wanted to talk about. I found this interesting because, again, a turnaround story, at least from what their Q4 numbers are showing. So their revenues have gone up substantially. So you've had nearly a 343% jump on revenues. Their EBITDA has gone to 306 crore rupees versus a loss of 8 crore rupees. So margins at 23% and net profit also at 146 crores versus a loss of 11 crores. So, you've seen already the stock doing fairly well yesterday, but in terms of a turnaround story on basis of numbers, you saw how Sterling and Wilson perform yesterday. You might see an interesting move on Tejas today, or maybe a sell on news, but Tejas is definitely an interesting number to watch out for.
Yeah, the stock itself was on fire yesterday, 17%, big volumes as well. So whether it's buy the rumor, sell the news is going to be something I'd like to see.
Yeah, but just the quantum of the business that they are in, the kind of numbers that they've posted doesn't seem like a sell on news, to be honest.
I hope so.
Yeah. They've been talking a lot about this linearity of growth going ahead as opposed to it being lumpy. Let's wait and watch how it shapes up. But certainly a stock that should be top of radar. Just before we talk about some of the other stocks, I thought and before my 3 stocks, I'm just saying M&M Financial is a really interesting development for a company to defer their Q4 numbers because of a fraud detected with regards to KYC documents. I mean, it's quite something, and you would probably see an impact coming on M&M Financial in the session today. Because every single time you think that there is stability coming in numbers, etc. There's an issue or two that keeps on cropping up for this one. I mean, you just look at the last 4 or 5 years, the stock has been steady between this 200, 300, doesn't go anywhere while the other NBFCs do what they do. And now this, having to defer the numbers because of a fraud detected, which was not detected earlier.
To the tune of 150 crores. I mean, that is a huge fraud. So while it sounds like it's a big deal to defer earnings on back of that, but with a quantum of 150 crores, you might have to take a break, take a step back.
Can I tell you what was the most frightening part for me? Of course, bad for the company, the numbers, the stock investors. The fraud is embezzlement of KYC documents.
Yes, that's what
and
Niraj
forgery
said, yeah.
of KYC documents. So that you know,
and hence the fraud
becomes scary for vehicle loans. No, it's because all of us give KYC documents constantly for everything all of the time. And the fact that there can be forgery and embezzlement of this, you know, size is what is really worrying on all ends.
Yeah, so M&M Financial, and we should pull that stock up. We've already done that, but just watch out for that one. Now, to some other stocks. So, Piccadilly Agro could be an interesting one in the session today. It's a small stock, but revenue is up 39% at 282 crores versus 202 crores. So watch out for that one. 39% uptake is okay. I mean, not as great as the Tejas Networks, but not bad. But then you look at what they've done on the operating line and they've on the PAT line. Operating profit margins at 22.82% versus 4.89%. You know, clearly people are having Indri whiskey by the dozens, it's seemingly. And PAT, as a result of that, over 8x jump in profit after tax at 43 crores versus 4.97 crores. We'll get the management today exclusively on NDTV profit between 9 and 10 a.m. at some point of time. So you might want to tune in for that. But this certainly seems a stock which was up 5% yesterday, yes, but could react further to these numbers today as well.
And Niraj, with this one, of course, that was a similar play out that we saw last quarter. Their numbers were a clear beat. The stock did really well. So I think they're notoriously getting famous for outperforming the street and doing really well. So alcohol clearly is the piece.
Yeah, and you know, they've done 110 crores as profit for the year. So therefore, optically, current earnings, it trades at 45 times. But if they manage to do this 45, 50 crores for the next year, hypothetically, if they do, right, then the stock valuation actually halves from 46 to 23 times for a company. Assuming that they do, we'll ask the management all of that, but assuming that they do, then it's a stock trading at 23, 24 times for a business growing at whatever times. So people might just see reason for that to continue as well.
And
so it could be a very interesting
discretionary spending, which is a sweet spot for Indian consumers.
And I think the point that you made, you have one blockbuster sort of a product when you talked about Indri. Yeah, and that can, you know, sort of perceptionally also change things.
Yeah.
So, it's got one more to add.
Go on. No, so just one was Piccadilly Agro. I thought Indraprastha Medical could be interesting because Quant Small Cap Fund has bought about 5.5 lakh shares at 249. These days, Quant name getting associated does evoke responses. Let's see if there is some reaction there. And lastly, guys, I know we've spoken a lot about Jio and the fact that, and we'll talk about it in detail, but telecom is in news for multiple reasons. Vodafone, FPO. I mean, yes, people are quibbling about the retail portion not getting subscribed. Look at QIB. 18 times on that size.
That's why I put it on my radar. I think Vodafone is definitely going to be an exciting one.
This is what I want to understand. So you've got oversubscribed from HNIs and institutions. Retailers haven't taken to this. Does that mean that on listing of this, in that sense, you will see heavy selling because HNIs will come and dump the stock, right? No, but, it could be a gain that you've gone into because it was a discount. Made that couple of rupees. See, this is not sticky money, right, at the end of the day.
Yeah, but I would presume that if the QIB book, which has been heavily subscribed so much, and there is so much of anchor book allocation that was done as well. So barring the
anchor book, I'm going to keep the anchor book out. I'm talking with the HNI subscription.
Could happen.
Retailers haven't taken to this, surprisingly.
So, again, you don't...
there was a fair amount.
I'm not anti-Vodafone either, guys. I'm just trying to understand because retailers did not catch this wave. There was a fair bit
of retail participation in Vodafone for a while. It's been a favorite of retailers.
Then why not pick it up at a discount?
Maybe.
I mean, if something looked good to you at 15 rupees, it should look great to you at 11, I'd imagine. Right?
At the end of the day, comparatively, retailer portion.
Now, this was an interesting angle which Sajit actually brought to my notice, and he said if retailers haven't gotten lock, stock, and barrel, HNIs will come out and dump this counter, and that's what's going to be interesting. So, barring the anchor book, of course, which is sticky, we'll have to wait and see. We'll have to wait and see what is going to happen for Vodafone Idea. But yeah, the stock today could be one to track.
Vodafone, and as a result of that, and I'll talk about it in detail, of course, but Indus Towers too.
Yeah, Indus Towers is an upgrade. I think that's a good play. The stock has done exceptionally well as well. But Reliance India, let's quickly get that one up as well. Those earnings, I'm not sure how we are viewing this one, because while their revenues are down 70-odd%, its EBITDA came in at 6 crores versus a loss of 64 crores. So I think that's what is staring us in the face. Their export business is continuing to see a sharp decline. They remain focused on improving their market position through superior product offering to solve farmer needs, like they say. But the investments that have gone behind marketing, manufacturing and digitization is what had led to that sort of loss being posted. But the company does expect that the catch-up will take place over the next couple of years. Margins at 1.37, I'm not sure what the comparables of those are, but for now, it doesn't look like much a story to tell. Revenues have dropped, and lower prices and weak global demand could keep the tap on revenues. So, but I think the positive takeaway is that the EBITDA has actually improved, and that may lead the stock to reacting well for now at least.
So Reliance, definitely one on your radar. I would just talk about a Honasa as well. Honasa already with that up move, but you have a Jefferies note which has retained a buy with a target price of 590 for a Honasa right now. That's for a 404 rupee stock. So an upside potential of 53%. They like the management focus and agility. The Derma company is the trigger, because you've had a big bump up in the Derma company, and they say it's now comparable in scale to popular FMCG brands like Pantene and Sunsilk. The offers active-based products garner leads 20% share. So I would say growth over profits focus of Honasa is something Jefferies likes. The stock was already 4.5%, nearly 5% up yesterday. You might see another upside today. That's one worth watching out for. Niraj was talking about Indus Towers. CLSA has a note out today. They've upgraded to a buy, revised the target price to 450 from 335, so further upside of 28% on Indus Towers. And time and again, our analysts have come on the channel and said that rather than a Vodafone, you might as well do an Indus Tower if you want to have a better play on this. So the past due settlement is the entire play over there. Indus Towers is one maybe we should watch out for as well today on the show.
Just very quickly, Niraj, and I don't know whether you've been tracking this, capital market stocks, anything happening there? Because you've seen from your 360 WAM, Angel One, asset management play, UTI Asset Management, Motilal Oswal. Anything that you've heard from
yesterday
experts
too,
on the street? I'm just finding it very surprising that all BSE as well actually did quite well yesterday.
Yeah. No, yesterday too, all of these stocks were doing well. I was so incidentally post-market hours, I met somebody who looks at this space very closely. Yeah. So for each of these customers, the call is that there's a story of annuity businesses, sticky annuity businesses looking good. So for Nuvama, amongst everything else, 20% of their book is this custodian business, which is very, very sticky. They started it 3-4 years ago or thereabouts, and that business has grown from whatever they started off with to currently AUM of close to 70,000 crores. And that's a sticky business, contributes to 18% of Nuvama's overall pie. So that is for Nuvama. For Motilal Oswal, the wealth business, for Nuvama, the wealth business, but for Motilal, the wealth and the asset management business, as opposed to the broking business, adding a very sticky annuity pie. Similarly, for 360 WAM, the distribution piece is so solid for them that almost every AIF or a PMS would have them as one of the distributors, and therefore that piece as well. And we know what's happening with BSE or CAMS, etc. But
you talk about this distribution and this wealth business, which is largely where the valuation game is coming for, because we've seen the likes of a Centrum or a JM who've not focused on that, and you've seen the businesses struggle. They've not got the premium that they've been seeking. But what also is interesting is that you've got a number of new unlisted players in the wealth business, right? Despite that, it's not coming in at a cost of the big daddies losing market share.
It's certainly not.
So I think with Angel One, of course, while the profitability wasn't great, the focus of the industry clearly is to win market share, focus on revenue, and build and profitably, then I guess
and
it's the second leg.
And an expiry every day, Samina. Expiry every single day. Look at the volume.
My question is, how do you win market share when the moat is so low? Everyone has pretty much the same product. How do you get customer loyalty? I think it's an interesting sort of and a very tough fight right now.
But also sticky, right? If you've gone to a broker, you largely stick with the broker. Largely, no point to change.
Unless you have a bad experience.
And financialization of savings, right? So, I mean, you're going to increase your wallet share. I think it's about that hook. Once you've got that client in wealth, the money just keeps flowing in. And I think that is reflective of the way the market's participation has been from domestic players as well. But interesting play. I think I'd be very intrigued to try and understand more about the capital market sector. For now, it looks good. It's had 4 straight days of gains. Let's see what happens today.
Okay, let's now try and focus on Reliance Industries. That's the big one as well with the numbers. Remember, it's a big day for results today, but yesterday amongst the big daddies, it was Reliance. Reported numbers in line with revenues while profit beat the street estimates. Let's bring in Mihika, who gets us more details about the scorecard and what brokerages might be saying. Mihika, good morning.
Good morning. So yeah, numbers were backed by strong performance in the oil to chemical and the consumer segments, which both saw double-digit growth. Revenue was up 5.6%, EBITDA was up 4.6%. Operating margins did fall 8 basis points, were in line with estimates, and net profit bumped 8%. When you look at the segment-wise performance, first we have oil to chemicals. Sequential gain was 1%, but it was up 11% year-on-year in terms of revenue, and this was on better realizations for petrol and diesel. EBITDA was up 19.3%, and this was driven by sharp rebound in gasoline cracks. And the results, strong results, come despite a challenging margin environment where fuel cracks fell 20 to 25%. Onto the oil and gas, revenue was up 42%. EBITDA also expanded 48%, and the higher EBITDA was mainly driven by production growth, around 66.4% rise in the KG D6 block production. And on an annual basis, oil production was up. However, gas production was down 5%. We had Nuvama, which maintains a buy at a target price of 3,500, which implied an 18% upside. And they stated that the OTC or the gas accounted for 65% of the consolidated net profit. And the EBITDA growth was on better crude sourcing, which is from Latin America, according to the investor presentation. And that Reliance is also at a unique advantage due to the 23% annual dip in ethane input prices, and they also envision the new energy rollout to take place and to be the next leg of growth for the company. Then we had Geo Platforms, revenue up 13.4%, mainly led by subscription growth and a better mix of average revenue per person, which was stable at 181.7 rupees. And lastly, Reliance Retail growth was mainly led by the consumer electronics, fashion and lifestyle divisions, where revenue on a consolidated basis for the retail segment was up almost 11% on an annual basis. And lastly, 562 new store additions with the gross area addition of 7.8 million square feet.
Okay, Mihika, thanks a lot for that. Just an offshoot of what happened in Reliance is what happened in Geo. And amongst everything else, analysts are now saying that in the calls that have happened with Geo, or Reliance, as the case may be, Geo thus far has been putting up the posturing that they do not want a tariff hike. Now they're coming out and saying that tariff hike might be on the anvil, or they are open to a tariff hike. Now, that's the point that brings telecom firmly in focus. For Geo, and forget Reliance, but Geo in particular, the results that have come in, and if there is a tariff hike that comes in at some point of time in the next 3 to 6 months, what does it do for the whole telecom space? One, for Reliance is a positive. So because Geo is such an integral part of Reliance earnings now, and going ahead over the course of the next 2 or 3 quarters, can Geo be the big thing? So that is one for Geo. Then if that indeed happens, I mean, for Airtel, they've been crying hoarse about the need for tariff hikes to come in, and almost everybody would say that Airtel is the best place to benefit out of a tariff hike if it were to come in. It brings Airtel firmly in focus. It brings Vodafone in focus because Vodafone, 2 aspects. One, now that the FPO has gotten over and they have the money and they'll raise debt, they'll be able to deploy 4G, 5G, which they have not been able to do capex for earlier. And that would mean a clutch of customers, which are currently 2G customers, move to 4G. And therefore, the incremental beta for Vodafone in terms of ARPUs is probably the strongest amongst everything else, purely by virtue of this coming into play. And if Vodafone gets the necessary muscle to be able to repay the dues to Indus Tower, then Indus Tower comes firmly into play, which is possibly the reason why we've seen an upgrade today as well from CLSA and upgrades from multiple other brokerages over the past few quarters. Yes, the stock has seen a bit of a ramp, but a steady Indus Tower with maybe Bharti and Vodafone paying off the dues in equal measure, Vodafone particularly so, would mean that even for Indus, the going might be good. I dare say for the next 6 to 9 to 12 odd months, telecom might be one sector that you want to keep a keen eye out for.
You know, Niraj, you talked about Indus Tower, and this is where I am a little stretched. I'm not sure what the CLSA price on the stock is, but the counter in the last 1 month itself is up to, oh, wow, that's another 100 rupees from these levels. The last 1 month, it's up 25%. The last 1 year, the stock has done about 150. And there's also talk about an MSCME inclusion on Indus Tower. So things clearly working out for the counter. But yeah, 450 is not just ambitious, it's actually a pretty solid target on the counter. I wouldn't be surprised if it's another morning of a 10% gain on Indus Tower.
For Indus, definitely. But my only point is that when everyone is going to increase tariffs, everyone's going to ramp up. You have a Jio on one end, a Bharti Airtel. Vodafone might be do better than what it's doing right now. So in relative terms, there may be an improvement. But in that big picture, after a point in a three-player market, are they really in a position to be a third player which gives a tough fight to the other two? I'm not very sure about that.
Deepak Shenoy, I think, said this on our channel, and again, disclaimer, I am not against Vodafone Idea in any way, but he did say that they've gone out and raised this huge sum of money, but they'll soon run out of it, and then
Correct.
What's next?
Correct.
So you keep raising funds, but if you don't fix the house, it's only going to give you that much of a runway.
On this point, I second that concern.
From, of course, an analyst who tracks the stock. But yeah, nevertheless, worth a mention.
All right, time for a very quick break. But we'll come back with all things F&O after the break. So much more to discuss on what's going to be an interesting morning. Stay tuned.
Welcome back. You're watching India Market Open, and it looks like it's going to be another positive start for the street. The bulls clearly in control. The last stories have been good. The Nifty closed about 22,300. We will attempt to get to 22,500. And of course, in order to indicate that we've ended the interim selling on the street, we will have to see follow-up buying and sustainable buying in today's day of trade. Implied Nifty indicating to a positive start. No runaway rally. Remember, Asian markets aren't doing too badly. The handover from Wall Street was pretty solid, but they were, of course, weak for the last 7 days. And we've already eked out some of those gains. Well, that's Asia, so that's of course what we'll move on from. In terms of Nifty futures, there's a marginal premium. The Nifty futures currently trade at with a 22-point premium. Open interest seeing a marginal decline. Bank Nifty was the star of yesterday's trade, with private and PSU banks both doing exceptionally well in trade, and that's reflective of what we're seeing on the screen. Nifty Bank futures traded a 65-point premium, and open interest has seen a decline of 16%. In terms of the distribution of calls and puts, what you're really seeing is maximum call OI was seen at levels of 23,000. That, of course, was followed by levels of 22,600 and 22,500, clearly indicating that those are going to be two very important levels of resistance that the bulls will be facing in trade. Maximum call OI addition was seen at levels of 22,200, and put writing was seen at 22,000, like you can see. So that becomes a very important level for the support for the street at 22,000, followed by 22,200, and you've also got 22,300 that saw a little bit of call put OI being added. Well, you've also seen an improved PCR ratio, which now trades over 1, clearly indicating that we've seen more puts options being bought than call options, indicating a fairly bullish sentiment on the street. A bunch of stocks are in the F&O band, so you want to watch out for those too. Be mindful when you go on and trade. Counters like Hindustan Zinc are out, but others have actually been added to that list. That's what we have. If we can pull up a few stock, okay, I guess we've got Amit Goel, who we're going to connect with to get a sense of what today's trades are. Amit, good morning. Thanks for joining in. 2 straight days of gains. It seems like we're in control. Maximum, of course, call OI is at levels of 22,600, assuming that's one attempt that bulls will be making over the next few days.
Yeah, hi, good morning, Samina, and good morning to all your viewers. The market has been in a tearaway rally, taking support from higher time frame support levels of 21,800 odd levels. We had when we met last, I had kind of anticipated that we would have a little bit of bearishness last week, but it's essentially a buy on. It's a structural bull market, and it's going to be a buy and dip kind of a scenario, which kind of played out. And I see that 22,500 could possibly be attempted in this expiry. But I will refrain from giving a trade view on Nifty, since this is a regulatory obligation that since I trade in Nifty, I will not be able to give a view on that, trade on that. But I can, give a view and a possible trade setup in Bank Nifty. Bank Nifty has been leading the rally, and we have had a very smart pullback from the low levels of 46,500 odd levels. Even here, both the structures look fairly similar. It's structurally a bull market. It's a buy on dip sort of a market. 48,500 could possibly be an attempt if the call unwinds. The call open interest unwinds at 48,000. That could be a possible trigger. So the kind of view that I'm looking in Bank Nifty is that if we see a change in open interest getting reduced for the 48,000 call, I would attempt to buy a simple call for the next week's expiry, that is the 30th April expiry. I will look to buy the 48,000 call for about 470, 490 rupees, keeping a rupee stop loss of about 3,000. And initial target would be about 3,000, and we can trail for bigger profits if we eventually have a tearaway rally continuation. And that's the view on Bank Nifty.
Right. Amit, so you're constructive on Bank Nifty. I believe you've also got a bull put strategy on ONGC. For our viewers, a bull put spread strategy is when you're expecting a moderate rise in the price of the counter. You want to take our viewers to that, Amit, as well?
Last time also when we met, I continue to have a bullish view on ONGC, since technically speaking on the daily time frame, it is trying to give a breakout from a triangle sort of formation. Even on higher time frames, it is a structural bull run sort of a counter. So what I would like to do is I would like to take a longish view for the next expiry, wherein we can construct a bull put spread. As you said, it's a bullish expectation, wherein I would look to sell the 270 put of the May expiry and not for day after tomorrow, and buy the 260 put again of May expiry, where the max profit, the theoretical max profit stands at 13,000, and the max risk, which is on expiry, stands at 25,000. But we are not really looking to incur all that. If the view goes wrong, we will again keep a rupee stop loss of about 3,000, and we will aim for a similar target of 3,000 and trail for higher profits. That's the view on ONGC.
So you're selling a put at 270, buying a 260 put, one lot each. You've got a limited profit or limit gain to be made on ONGC. ITC, I believe another constructive call there too, a bullish one on ITC, Amit?
Yeah, ITC has been taking support from 400 levels and has been smartly moving up, but it has also been facing resistance at about 430, 440 levels. So I kind of, see a fairly range-bound view on ITC, but on a smaller time frame, it has kind of given a slight bullish breakout. So what I'm looking to do is try and capture this, expected up move in ITC for the next couple of days. So here I'm looking to construct a call butterfly, which is for this current expiry. We could look at entering this. It is a limited profit, limited risk trade, wherein we sell a straddle of 430 call and buy wings at 425 and 435. Again, all calls. So the max risk in this trade, the theoretical max risk itself is about 2,000. So it's a very, very safe and limited risk trade, where if we are able to pin the expiry at about 430 or levels, we could look at making some profits of about 6,000 rupees. Though I would like to trail again at about 3,000 rupees and then trail for higher profits. The margin in this would be about 71,000.
Right, so it's limited profit, limited gain, but what you essentially, Amit, is recommending to do is to buy 2 calls and selling 1 call, and your profit could be up to about 6,000 per lot, and the risk, of course, there's a downside as well of about 2,000 rupees. Amit, very quickly, I know this is not part of your list, but a quick word on Reliance Industries. Is there any trading opportunity there today for traders? Any options there that you'd be looking at, doing?
Let me just look at the chart. Yeah, Reliance is. I'm structurally bullish on Reliance. It has a similar meet as ONGC, but it has not yet given a breakout. The results. I'm a little concerned about the large cap stock results because they have not been really beating the estimates. They have been fairly, if I could use the word, underwhelming, right? It really remains to see. It needs to be seen as to what it could do in the next few days. And I would probably look to take a bullish punt on Reliance for the next expiry, provided it crosses 3,000 levels. Fairly bullish on the counter, but we need to see how the reaction goes with respect to the results.
Thank you for that, Amit. So that's a constructive call on Bank Nifty, on Reliance Industries, ITC and ONGC. And it's back to you guys in the studio.
All right. So the other big story this morning, of course, that we're tracking is M&M Financial. So they delayed their earnings board meet. But the reason they delayed it is the important bit. This is after 150 crore rupee fraud at a Northeast branch. Now, what is this fraud and why was this concerning enough for them to delay their board meet? What is the impact on the financials of the company? Harsh is joining us for more on this. Yes, Harsh.
Well, Tamanna, you've pretty much said it, 150 crore in terms of quantum. But let me try and delve into what the cause of this is. It's in the retail vehicle finance portfolio of M&M Financial. So that's the first piece. The other one is with regard to a specific branch, and the reason for this is a fraud with regard to forged KYC documents, which has led to embezzlement of company funds. 150 crore is the quantum. One is it's sentimentally negative. It brings down investor confidence in the company. The other one is also with regard to could there be possible other exposures within this branch which have not yet come out, or other branches. Could that risk percolate? That's the other one. Those are some open-ended questions, of course. With regard to the 150 crore itself and the quantum, when I'm looking at the profit after tax expected as per all analysts' average on Bloomberg, it's around 690 crore. So and this is Q4 profit after tax number. So the 150 crore number looks quite large in terms of the knock on the Q4 number, which is likely to happen when the results do come out. So maybe 20% of the profit will get erased just as a result of this particular issue cropping up. The other one is with regard to the provisions number. The provisions number was expected to be around 120 odd crore in this quarter, in Q4. So this will actually, if they were to provide for this number, it will ensure that provisions actually double up or more than double. So that is the other concern. So credit costs will actually spike up. Credit costs were expected to be around the 0.5 odd % mark as per Motilal Oswal estimates, and that number will likely go up to over 1%, and it will also have a knock-on effect on the overall FY24 credit cost or provisions number. The provisions number for FY24 as per Motilal Oswal estimates was supposed to be around 1600 odd crore. So 10% knock on that one as well. So likely, one, sentimentally negative, two, it's a decent-ish material number with regard to the FY24 overall numbers as well. So keep your eye on the stock, definitely an impact on this one.
Okay. So you're definitely going to see an impact, but perhaps more than just sentimentally. Also for a financial firm, if you can't keep your data safe, so then that is a big issue in any case. So Harsh there with all of those details. Meanwhile, Sunny Agarwal joins us today. He's head of fundamental equity research at SBI Cap Securities. Sunny, very good morning to you. Let's first start by getting your take on Reliance. What would you do with Reliance today? That's, I think, will it turn out to be the big mover this morning?
Yeah, good morning, Tamanna. Thanks for having me on the show. I think a very decent set of numbers from the Reliance, especially on consumer business side. So retail, telecom business, both continue to do well. Oil and gas business has been one of the star performers, led by increase in gas production from KG-D6 basin. I think one thing is pretty sure that looking at the numbers from the consumer business, very soon we will see an demerger and listing of the consumer business, maybe 12 to 18 months down the line. And that can be one of the value unlocking moment for the Reliance industries as a whole. At the same time, what I like about the Reliance is that maybe 3 to 5 years down the line, the new energy business, which Reliance is incubating on hydrogen, solar and wind side, even that will become a pretty robust cash flow generator maybe 5 years down the line. And with the telecom business capex at the fag end of the cycle, I think the debt should peak from here on and cash flow should improve. So I think I would be buyer in the Reliance with an expectation of kind of 12 to 15% CAGR return over the period of 2 to 3 years.
Okay. Sunny, we were just talking about the extent of... Actually, can I just extend that first argument to telecom per se and then talk about M&M Financial? But since we are talking about Reliance and telecom, Jio is showing the willingness to hike tariffs at some point of time. Assuming that tariffs... I mean, what would the hypothesis be? Would tariffs go up and therefore is Jio or Reliance a principal beneficiary? Would you believe Bharti will be the better telecom stock to play, or because Vodafone has now gotten the FPO out of the way and money in the bag, is Vodafone a prime way to play, or would you not play any of these and maybe go for Indus Towers?
So I feel that the entire telecom industry is in sweet spot because we all know that now earlier it was 2.5 player industry. Now with Vodafone back in the fray, I think it's a 3 player industry, and I think there is a pretty long runway in terms of likely increase in ARPU from here on. And time and again, we are hearing from the various management that from Bharti even that post-election, we may see kind of 10 to 15% kind of tariff hike directly, indirectly through maybe chopping of the packages which are at the lower end, forcing consumer to migrate to the higher end packages. And there is a natural inclination to move towards the higher ARPU range because of the increasing consumption of data packages as you migrate from feature phone to smartphone, as well as within smartphone, as you migrate from 4G to 5G. I think 2-3 years is the period where we may see a consistent improvement in ARPU, and it will be beneficial for all the 3 players, whether it is Vodafone, Reliance, and Bharti. So overall, we are bullish on a telecom as an industry. And at the same time, with the Vodafone issues, funding issues behind us, I think Indus Tower is also a good play to ride on from a short to medium term perspective.
Okay. So watch out for these. We'll talk about M&M Financial as well. Actually, we've discussed in great detail between us, and Harsh has come in and given us a sense also of what could happen there. So keep an eye out for that stock too. We'll talk about it in detail. Let me first get in Aditya Agarwala, Head of Research and Investments at Invest for EDU as well. Aditya, quick view, trending day yesterday. Does it mean that there could be more upsides? Good morning to you, of course. Could there be more upsides today on the Nifty? And couple that up with your stock ideas for the morning.
Good morning, Niraj. Thanks for the show. Markets have seen 2 days of rally, as you mentioned clearly, and now we are sitting at 61.8% Fibonacci retracement level of that entire correction. So I'll closely look out for that resistance of 22,390, 22,400 on the upside. If that is not taken out, Niraj, today, I believe market could be in for a bit of a profit booking as well. 100, 120 point correction cannot be ruled out. On the flip side, if bulls manage to drive the markets beyond that resistance of 22,400, then I see another 100, 150 point upside on the markets. So we are clearly at the midpoint of that range in which markets have been oscillating. So 22,400 is something that I closely eye and trade today. SGX is suggesting a positive open. So let's see, after half an hour of trade, if markets do manage to take out 22,400, then I'll be a buyer in the market for at least another 100, 150 points. But again, having said that, markets are locked in that range. On the upside, 22,700, 22,800 will be the major hurdle. Now, coming to some stock-specific ideas, I've got a couple of buy recommendations for viewers. The first is Aditya Birla Fashion Retail, ABFRL. Stock has shown a decent strength of late after a good up move. Stock went into a sideways consolidation, and in trade yesterday, it's again broken out from that flag pattern on good volumes. So I believe at current levels makes a good buy for a target of 265 with a stop loss at 226 on the downside. The second stock recommendation is Divi's Lab. Again, Niraj, the pharma space is looking interesting now again. And Divi's is something which has taken support at the 200 DM, and from there it's popped up again yesterday. So for a target of 3950, I'll be a buyer in Divi's Lab for with a stop loss at 3650 on the downside.
Aditya, good morning. You talked about a Divi's Lab, but there are others in the pharma space that have been really on an up move. Lupin, Zydus, any of those that you like or you're putting on your radar?
Oh, yes. Morning, Tamanna. Definitely. So a whole host of these pharma names are looking interesting. No doubt about that. If I have to pick a couple of them, maybe Dr. Reddy is also looking interesting to me on the charts. That can also be looked at apart from Zydus Life. So these are the two stocks which I like. Talking of Dr. Reddy's first, I think stock can easily test levels of 6,400 on the upside with a star support at 5,800, 5,900 on the downside. Zydus Life too, after yesterday's good up move, I think stock is showing strength and can see levels of at least 1,100 on the upside, with a downside support at 900. So makes a good risk to reward as well, Zydus Life at current levels.
Aditya, very quickly, some of these banks had a pretty good run yesterday. PNB, Bandhan, Axis Bank, SBI, Bank of Baroda. I mean, the whole host, private and PSU together. Any constructive calls on banking names today? I mean, HDFC was not much of a performer. Do you think they could play catch up today?
Morning, Samina. I still believe there's a better chance in the mid to smaller cap banks, be it the PSU or the private sector banks. As you mentioned, Bandhan Bank yesterday was looking interesting. RBL Bank is also something which caught my eye yesterday. It's almost on the verge of a breakout from a falling channel. And the moment it crosses levels of 260, which is the immediate hurdle for the stock, if it does so in trade today, Samina, I believe RBL Bank would be one of the banks to eye and can easily test levels of from here 275 to about 290 on the upside. So it will be more of a positional trade in RBL Bank, and I easily see levels of 290 coming in about a month's time with a good support on the downside at 240, 245. I think RBL Bank is something which traders and investors should definitely look at. Has been an underperformer, but I think now it's time to look at our RBL Bank. And apart from that, maybe from the PSU space, I'll stick my neck out and hold SBI. Which is looking interesting after yesterday's up move. I think SBI is still looking good on charts. Can easily test levels of 800 on the upside. So SBI will be the second bet from the PSU space.
All right, SBI is second bet from the PSU space for Aditya, but let's focus a bit more on Reliance, the big numbers which were out yesterday. A beat, at least on the consolidated front, maybe retail left a little bit to be desired. Sushil Choksi joining us now. He's CEO at Indus Equity Advisors. Good morning, Sushil. Great to have you on NDTV Profit. Let's begin with your take on Reliance. Were the numbers as per your expectation? And as a lot of brokerages are saying, is your focus now on how Jio is going to scale up perhaps post-tariff hikes?
Good morning and thanks for having me on the show. I think the result was in line with the expectation of the street. There were some positives like oil to chemical, oil and gas. Retail was flat to marginal negative, and that is because of the seasonality coming from festive season in the previous quarter. Reliance Jio is still in making because they have not yet charging for 5G, and the ARPUs remain at 182. The scaling up based on all the services which they pan-India want to starting from home service and others. I find that ARPUs have to go up to get a better realization. So currently, based on the consolidated level, the numbers look stable. Most of the throughput, specifically on oil to chemical, the throughput at 78.2 million is the highest in last 5 years where refinery is concerned. And petrochemical is stable based on the current regime. You know, India is more Reliance is more a story of India growth because everything what they manufacture is touching a consumer end to end, whether it's retail, Jio, or plastics, or petroleum products on domestic or international, being the largest exporter. So I think it is, if Indian economy is growing at what it is and our aspirations are 5 and 10 trillion, the business is what they are and likely to grow. So you have to take a proxy based on what the GDP number is and estimate that they will grow somewhere around 2 times like you estimate on banking credit.
Okay. Sushil, good morning. One quick word. Almost everybody seems to be penciling in that it will be telecom which will drive the next leg of earnings growth for Reliance, demerger, etc. notwithstanding. To your mind, what is that biggest trigger for Reliance going ahead? Would it be a tariff hike, or could it be the IPO / listing of platforms and retail separately over the course of the next 12 to 18 months?
If you look at historically, IPO has always given, or a listing on the new division, whether it is Jio or retail, will give a bump up. It is evident from Jio Financial listing, from where it got listed, it's already a double. So based on that, it's definitely a listing of Jio, which will have a positive impact. But, you know, ARPU is definitely, Sunil Bharti Mittal is continuously talking about 300 rupees in times to come. So just estimate if current margin of 50 to 53%, which they are hovering every quarter on quarter, if ARPUs increase by 25-30% over a period of 2-3 years, because the amount of consumption the Indians are doing at a consumer level on each mobile set or while traveling or watching movies or whatever. And the commercialization also is going to be positive. So I think telecom is definitely a driver, but equally the market gives the consumer business, that is retail as well as Jio, separately listed, would have a game changer where Reliance shareholders are concerned. And oil to chemical and oil to gas remains a stable horse in terms of providing the cash flow to deleverage the balance sheet. So whether it's the AGM or 28th of December, I don't know when the listing announcement will happen, but it seems that telecom is on showing some signs that it will be listed first.
So Samina joining in. Very quickly, how much of all this is in the price? Would you recommend buying RIL at levels of 3,000 for the next 1 to 2 years?
Everybody is talking about retail Jio and thing. I think the story will change with hydrogen and solar business, because end-to-end solar manufacturing, only 2 groups are talking about polysilicon to module. China dominates 97% of the world. But if you want green hydrogen, we need solar and wind. Reliance will add value there. And second thing, if Indian economy is growing at this 8%, which is estimated for current surprise, which is estimated, if markets can 15% EV to EBITDA growth on the current balance sheet size and deleveraging, they can attract good amount of capital to deleverage also. I think if you are taking a fixed deposit kind of a structure for 3 years, it is definitely going to be positive for long-term shareholders, because when foreigners return to India, they'll be buying large caps, not mid caps or small caps, predominantly. So I think it's a good story. Only thing is, one needs to have a patience. The elephant can't dance every day. It takes time.
It's truly a heavyweight in that sense. But Sushil, always great having you on the show and talking to us about RIL. That's great perspective with all those decades gone into tracking this one. But be patient. The stock looks good. Numbers also largely in line with street expectations. Telecom could be the sort of the alpha generator for RIL going ahead. We'll take a break. Implied Nifty is indicating to a marginally higher start this morning. All that and more on the other side. So stay tuned.
Welcome back. Are we going to have another good morning, and will that sustain? That is the question. The Qs look set up for a pretty decent morning. Big boy Reliance has come out with numbers better than expected, or at least in line for most parts. Your implied open points to a spot of green as we start off. Sunny Agarwal and Aditya Agarwal are joining us this morning. Sunny, let's start with your picks. What would be your top plays today?
Yeah, so I would like to bet my money on Raymond Limited at current market price of 2050. The market cap of the company is close to 13,500 crore. And basically, if you look in terms of business, the company is a well diversified basically into the branded apparel business, textile. At the same time, real estate business is doing well of late. And engineering business is something where the company is focusing in terms of future growth driver. Post sale of FMCG business, the company has turned debt free and right now is sitting on a cash balance of 1,300 crore. I think quarter 3, which is the December quarter, was one of the record quarter for the company, and we expect the performance to continue in FY25 and as well as in the fourth quarter of the current year. What we expect is that company is likely to deliver overall on a consolidated basis profit of close to 900 crore in FY25, and at current market price with market cap of 13,500 crore, I think it's trading at a very reasonable valuation, 20% plus ROE debt-free company. One can add this stock in a medium to long-term portfolio with a price target of 2,500 rupees. Another pick is from a mining sector, which is MOIL. So MOIL is a Mini Ratna CPSE company at current market price of 350, close to 7,000 crore market cap. One of the largest manganese ore producer in India, accounts for close to 45 to 50% of all India's domestic manganese production. And manganese is one of the important mineral which goes in the production of stainless steel. And as we all know that the outlook for the stainless steel production in India is pretty robust. close to 100 to 125 million ton capacity is likely to expand by 3x in over the period of next 8 to 10 years. And the indirect beneficiary continues to be the manganese ore producers like MOIL. At the same time, the company has undertaken a massive capex program wherein the capacity is likely to increase from 1.4 million ton to 2.5 million ton in FY25, and I believe that will add a lot of kicker to the growth in terms of the earning for the MOIL. So one can add this stock in a medium to long term portfolio with a price target of 400 over the period of next 6 to 12 months. Another stock which we like from the consumer sector is the Park Hotel. The company has listed recently. And what has happened is that pre-IPO, the company was making profit close to annualized profit close to 50 crore. And with an IPO proceed, the company has repaid the entire debt. And what we believe is that post this debt repayment, the company is likely to post profit of close to 100 crore. And at the same time, they are on the expansion spree. At the same time, what I believe is that their bakery brand Flurries is likely to do well going forward, and that is one of the additional value unlocking potential which we see in the company. So one can add this stock with a price target of 250 rupees with an investment horizon of 6 to 12.
Yeah, would you be playing for a little bit of a pullback on GSPL after a 20% cut yesterday? Will there be some sort of a bounce back which a trader can play into?
That's for me, Samina?
Yes.
Difficult to say. We'll have to see where the stock opens and how it behaves post-open. 310 on the upside is a clear resistance for me. Till the time that hurdle is taken out, I don't see a clear up move in the stock follow through. On the downside, the stock can slide to all the way to 290 levels, 285 to 290. So that is the target that I'm playing out with. I don't see a pullback. Maybe a continuation of the correction is what we can see all the way down to 290.
Just looking at some of the movers in the pre-open session, pull up M&M Finance. And we were talking about this data breach of KYC data they've had in one of their Northeast branches, hitting 150 crores, 10% down in opening trade on an M&M Finance. Vodafone, I just like to pull up Vodafone, also doing poorly after its FPO has closed. Another day of losses perhaps set up, at least in the pre-open session. On the other hand, Indus Tower, a good upgrade from CLSA, and Indus Tower's 4% up at least. Yeah, that's right, 4% up. 450 rupees was the target price that CLSA has hit. So you're seeing some sharp and smart moves this morning in opening trade. Aditya, any of these on your radar? And just M&M Finance financials, I don't know if you track that stock. And of course, there's a fundamentally very negative story on right now, but a view on that counter?
So Tamanna, 260 on the downside is a major support for the stock. That happens to be the trendline support. If that is broken on the downside, as the pre-open is suggesting, then I believe there is a case for a sharper cut in the stock, and then can stock easily slide down to levels of about 240 on the downside. So we'll have to closely see if the stock actually opens below 260 levels. If it does so, then I believe it's still a short candidate because it's in an FNO space. So I don't think so. It will halt at 10%. Then it can slide all the way down to levels of sub 240. Easily can slide. Talking of from the rest of the pack, I think Indus Tower is something which definitely stands out. And this is not the first time maybe most of the analysts would be talking about Indus Tower. This is one stock which has clearly outperformed the markets and continues to make higher highs, higher lows. I believe on the upside, stock can easily test levels of 400 and beyond if somebody holds on to it for about a quarter or maybe 2 quarters. So Indus Tower definitely will stand out from the rest of the pack.
Okay, we'll talk about Tejas Networks, Piccadilly Agro, Hudson Agro, all of these as well in moments from now. I mean, still early days in the pre-open session, but I would suspect that all of these would have started off very well, or at least at the end of the pre-open session will be active. So keep an eye out on those stocks. Piccadilly is up 5%, I'm sure. I would be really surprised if Tejas Networks is not reacting already. Yep, Hudson Agro is up 9% too. Ooh. Tejas should come up on your screen next. up 12%, no surprise there.
But when in life have we seen stocks go up 30-40% in 2 days, no matter how great the earnings
2021,
are, right?
2022, 2023 and 2024.
It's a new world. It's a new world order. I mean, so after a 17% rally yesterday, another 12%.
But blowout numbers, really.
Yeah.
But justifies a 30% upside on a stock price, I'm not sure.
But you see, fundamentally, things have turned around for Tejas. Importantly, it would be great to even speak. I think we're talking to the management on the channel later today, and it'd be great to hear from them what that entire story is about. Harsh joining us very quickly with the top 2 brokerage notes handpicked this morning, the ones that really matter. Yes, Harsh?
Well, first off, thanks, Tam, is CLSA on Indus Towers. You have CLSA suggesting that Indus Towers is going to be the key beneficiary of Vodafone Idea's fundraise. 5,700 crore owed by Vodafone Idea to Indus Towers. What this means is around 21 rupees a share on a per share basis. So that's the kind of value accretion which will happen once Vodafone Idea raises that money, and if it were to make good on its debt to Indus Towers. So that's the first piece. Second is with regard to just growth. CLSA believes that the planned addition of around 48,000 4G and 5G sites definitely warrants an upgrade with regard to earnings, 1 to 9% increase with regard to its earnings estimates for FY25 and 26. It also seems to suggest that valuations seem very favorable. They are suggesting that Indus Towers trades at a 60% discount to global peers, and therefore the risk reward is more favorable in this one. They've hiked their target price from 335 to 450 rupees. That's a very, very large hike in relative terms, and offers nearly a 30% upside even from here. Upgrade from an outperform to a buy. Second one is with regard to Honasa. Jefferies reiterates their buy. In fact, what they are suggesting is Honasa is a high conviction buy for them. Target price 590, 50+% upside from here. What they are looking at in terms of levers is the new brands which Honasa is developing and working on, especially with regard to its actives-based BPC, which they believe is not only an exciting domestic opportunity but a very exciting global opportunity. They are suggesting is that the Dermaco, which is TDC, is one of those 3 brands which excite them. TDC achieved EBITDA break-even in Q3 FY24, and profit ramp-up will slowly start to happen going forward, but of course not in a large way. They'll continue to grow the brand well, and basis their valuations as well as basis the moats which Honasa offers, they are suggesting a high conviction buy on Honasa, 50+% upside from here.
Thank you for that. Those are going to be a few stocks you want to watch out for. Honasa is up 2%. Just quickly pull up Aster DM if we can. I'm not sure if the reading on my screen is right, but 23% off on Aster DM. Now, whether this is a pre-market phenomena or the stock's going to open lower is what we'll find out in a few minutes. But guys, anything on Aster DM? Do we have anything on it? Nothing on the face of it. We'll try and understand what's happening here, but the stock is expected to see a gap down, if not a 20% gap down, but looking like it's going to be a weak start. Aditya, a couple of other ones, I'm not sure if you've already highlighted, but anything in the capital market space that you're trading this morning? Some of them have done quite well over the last few days. An Angel One, a 360 WAM, GM, Centrum, the whole host of names, Nuvama have had a good run. Today, if we get a flat start, would that present as a trading opportunity on the upside?
Oh, absolutely, Samina. In fact, Angel One is something that I've been liking for some time. Angel One, and then recently it corrected. So it makes a good risk to reward at current levels from the capital market space. One should definitely look at the stock with a good support on the downside at 2650. I think stock can easily test levels of 3200 on the upside. If we are looking at this space, I think CDSL is something which also looks very interesting to me. After a good consolidation, stock is up and away. Above 2050, I think stock can easily test levels of 2150 to about 2200 with a good support on the downside at 1950, 1900 odd levels. So I think both these stocks, CDSL and Angel One, makes case for a buying opportunity at current levels, and both can give you decent returns in this week or maybe next week as well.
Right, just a quick update. As to DM, the company has declared a special dividend of 118 rupees per share. So that explains the movement on that stock, the 22% downtick that you're seeing. So there's all is well, to say the least. Nothing really to be stressed about.
But M&M Financial, I'm interested in.
I saw that 5%.
It's 5% lower.
It's not hitting the rock in that sense. It's concerning, but 5%.
It started 10% down, and then we'll see in the.
But wonder what Sunny's view is on this one.
I think between now and the earnings, the pressure will be there, though.
Yeah, Sunny, M&M Financial, you saw that fraud news. Any quick thoughts here?
Well, I think it's a one-off event, and we have seen this happening earlier also. If you remember in the campaign, housing finance also, these things keep on happening, and I think these are the small gaps which ultimately all these large organizations will plug. Although we may see knee-jerk reaction, negative reaction, but if I take a slightly broader perspective, I think company annually make profit of close to 1,500 to 2,000 crore rupees, and 150 crore is a one-time hit. I think maybe a knee-jerk reaction, and post that we may see. Once the things stabilizes, maybe again a path to recovery over the period of next 2 to 3 months. So I would be buyer at a deep post this correction.
I suppose, and it's also a risk. This sector has to now, put into play and really guard against. In this case, it's literally fake KYC is given, and then 150 crores siphoned off from one branch. Very quickly, Aditya, view on a Tejas and a Hudson Agro. Both look placed for a very good start. Do you see buys at any point, or time to book profits here?
Oh, no, definitely not, Tamanna. Tejas, especially, despite the fact that it moved up 16% in trade yesterday, 16-17%, it's on the verge of a breakout into an all-time high territory. And technically, we say that if stock has entered into an all-time high territory, uncharted territory, it is supposed to go at least 10 to 15% higher from those levels as well. So immediately, I'm looking at a target of 1150 on Tejas network. Immediate hurdle on the upside is 950. If that is taken out as the pre-opening is suggesting, one should definitely be buyer in the stock for a target of 1150. With a good support on the downside at 950, that can be a stop loss. So I think Tejas network does qualify as a buy even after this 10% gap up open. Hudson Agro, yes, that is also something which is looking interesting. The only thing is on the upside, 1100 is a hurdle for the stock. So we'll have to watch and wait and watch and see if stock sustains above 1100. That is the 200 DMA for the stock. Then maybe stock can test levels of 1200 on the upside.
Okay. Aditya, 30 seconds. Based on the pre-open rates, your top call for this morning.
So Niraj, I'll stick to an Aditya Birla ABFRL for a target of 265 with a stop loss at 226. I think that is one stock which is looking very interesting to me on the charts.
Aditya Birla Fashion Retail. Well, remember, the corporate development having happened, the news flow and the brokerage views aren't necessarily the most constructive, but Aditya likes it on the charts. So do watch out for that stock in the session. A lot of stock reactions anticipated today, particularly from a results perspective. The broader end of the spectrum, the results are okay really. And in today's session, especially with the Tejas, with the Piccadilly, with the Hudson, we're already starting to see, or we'll already see some very strong reactions for sure. Let's see how they shape up post-open as well. And then keep a keen eye out for Tata Consumer, ICICI Pru, MCX and a few others as they report numbers today. But here come the first trades this Tuesday morning. We are in the green for sure. 80 odd points, 1/3%. Bring up the bank Nifty. Yesterday did well despite HDFC Bank. In today's session, starting about 1/3% in line. Mid caps about 0.5%. Small cap index, which did very well yesterday, are performing today as well. Bring up the heat map and show you what's moving and what's not. Remember, a lot of mid caps will move because we don't have too much of moves on the large caps for sure. On the losing side, there is Nestle, which is down about 1%. Remember, it's a week of results for Nestle. M&M, a little bit off. I don't know if it's the M&M Financial impact, but clearly no other reason, but it's flattish in trade. On the gain, Reliance is lying absolutely dormant. It's like 0.1 to 0.13%, so hardly any move on Reliance Industries post results. What's doing well is Bharti. I don't know if this is the effect of a possibility of the market believing that ARPU uptick or tariff hikes are in the offing, but Bharti is the top gainer. Shriram Finance, second on a trot, is doing okay. And there is strength in IT yet again. TechM, Infi, Wipro, HCL Tech, doing well. Remember, tomorrow and day after we have HCL Tech as well as Tech Mahindra coming out with numbers, and today's session Tata Elxsi. So it's a busy week for IT nevertheless, but clearly from a sectoral perspective, IT and banks still standing out, but IT in particular, Tamanna, seems to be doing really well. But the standout mover has to be Bharti Airtel. Less than 1% or just about 1%, but clearly the best mover.
I was just noticing Tata Consumer as well. Not too bad after the up move they had today. Ahead of numbers, but on the broader markets, let's just pull up the indices and see how the broader markets have opened, because Nifty in the positive, but not too much of an action there, just about 67 points up. The mid cap 150 up about 0.5%, small cap also in the green about 0.5%. So it's about individual stories and all about news flow. M&M Financials is what we'll pull up first. I want to see how it's opened. It was on a lower circuit in the pre-open session, stabilized by about 908, 910, but M&M Financial is going to see a bit of pain, about 6.5% down in the opening trade. So it's not just Q4 results being deferred, it's the reason why. It's because of a KYC breach leading to losses of about 150 crore rupees for the company. Literally fake KYC details were given and 150 crores embezzled in one branch in the Northeast, which is why they deferred their board results. Indus Towers is the other one. If you like what's happening with Vodafone, Indus Towers might be a good place. CLSA has upgraded it. They've hit a target, they've set a target price of 450 rupees, about 3% up on that stock this morning. Hudson Agro, Tejas Networks, both with good numbers. So, the point being that if there is a good set of numbers, decent fundamentals, you're seeing that play out as well, about nearly 7% up for Hudson Agro this morning. Tejas Networks is a phenomenal turnaround story. Perhaps the stock was up 17% yesterday and 14% up this morning. So for whoever has Tejas Networks in their portfolio, today is a good day. Our technical analyst says more to come in his view. Sterling and Wilson, I'll put in that category because of the same sort of story in terms of much better numbers this quarter, in fact going from losses to profits. Second day in a row it's doing well, 8.5% up. It closed 10% up yesterday. Spark on the other end of the spectrum, the pain is unending for this stock. Another day of fall and 5% down on circuit. So these are just some of the initial cues that I'm spotting. Samina, what else are you seeing this morning?
Stocks that are not doing too badly. So the broader markets are looking good. There is no runaway rally from what we are seeing. But lots of names that are having a positive start. The broader markets outperforming the benchmark just a little bit in early hours of trade. Beyond Tejas, Sterling and Wilson that continues to see some gains. We've pointed out Yes Bank is another one that's catching my attention this morning. SPS stake sale is what's keeping the stock up and alive. 4.5% higher on Yes Bank is what we have. You've also got Inox Wind. They've seen a 4% up move. Honasa has got an upgrade on back of which the Inox Wind is up 4%. Honasa is up 3.5% as we see it. If we can also look at stocks such as GSPL, after a 20% cut yesterday, there has been somewhat of a bounce back on the counter. The stock is up 4%. Not surprising, I did think that there could be a technical pullback on the stock this morning, and that's exactly what's playing out. The stock is up 4% as we see it. A few other names that we highlighted this morning may not necessarily be driven by news flow. Those are those capital market stocks that we've been talking about. So Angel One, 360 WAM, continuing to be your top gainers in trade. If I can get 360 WAM, that should be helpful. 2% high on that one. BSE also doing quite well as we see it. Rallis had a bit of a interesting quarter of sorts. While they've turned profitable, their top line has been hit quite sharply. The stock is down 3% in trade. Mahindra Logistics, another weak quarter, another quarter where margins have disappointed. This company doesn't seem to be seeking too much clarity in terms of where they're headed in the next couple of years. The stock is down about 1.5%. GSPL, like I said, BSE is also looking good. A few other names to name in trade is Inox Wind, Indus Towers that we've talked about. Vodafone Idea is not doing too badly this morning as we see it. Adani Group stocks are also looking okay in early minutes of trade. Real estate is having a good day. So from your Phoenix to your Oberoi, all those counters trading with an upside bias. On the sell side, Elecon Engineering is seeing some profit taking after seeing some gains last week. You've got some of those diagnostic names as well, seeing small cuts, but nothing too concerning at this stage. But I think the standout really is stocks like Yes Bank as well that aren't doing too badly. So I think traders are finding opportunities. And GSPL, after a 20% cut yesterday, I think if you bought that stock as a trader this morning, it'd be also not as happy as Tejas Network, but nevertheless not complaining this morning.
No, and shouldn't. But I'm just saying that in GSPL's case,
I think it's a technical bounce, a dead cat bounce, like they call it.
But
right?
the issue that they're facing is a fundamentally harsh one, which is going to hit them.
Oh,
for
yeah,
a
yeah.
while.
So this is trading gains. I'd look at it as intraday move. You take 4-5% off the table. Check out.
Yeah. Let me ask Aditya.
So,
in fact,
I think he was negative on that stock.
Yeah, just one point on Yes Bank. The market cap of Yes Bank is now back to the levels that it was pre-2018 dilution. So it's turned the whole corner after 6 years, and the market cap is back, survived, and now, in some sense, thriving as well. So that's the
Mr.
interesting
Rana
piece.
Kapoor is finally
out. I don't know if that's going to change things for Yes Bank.
No, I mean, it's coming a full circle in different ways than one. More ways than one.
No, the point is everybody talks about this dilution, right, in Vodafone Idea. Yes Bank has a 13x dilution in equity capital, and it's back to the 2018 levels. Yeah. That's the point. I mean, it's an interesting point, of course, but anyways, yeah. Sorry, you guys were wanting to ask something.
I want to get Sunny and Aditya's view on GSPL. Aditya, you're still negative on it?
Tamanna, yes, as Samina pointed out, it's a dead cat bounce, and I'll wait for 320 levels, which I mentioned. If it crosses 320, then maybe I'll look at further upside in the stock. There are other pockets where there is opportunity. I would look to stick to those pockets rather than going into GSPL at the moment. So 320, I'll watch. If that crosses, then maybe I'll look for a short covering rally.
What are those pockets after markets open?
Interestingly, Reliance has popped up after that flat open, and now it's looking good and up and away. If it crosses 3,000, then I think there's a case for a good up move in Reliance Industries, Tamanna, and can easily test level 3,200 on the upside. So Reliance Industry I'll closely keep an eye on. If it manages to sustain above 3,000 odd levels, then I'll be a buyer in Reliance at the stop close to about 2,900 with a target of 3,300 on the upside.
So, Sunny, anything that you're liking after the opening rates and view on Reliance, and I would say even a Bharti Airtel?
I think it's a telecom day today, so I think I would like to go ahead with Indus Tower and Bharti Airtel at the current juncture.
Interesting. Indus Tower and Bharti Airtel. Not surprising, really. Bharti Airtel, 1.5% now, 13.16. It's had a really strong week, I must say, the last few. So keep that in mind. Now, Sunny, I don't know if you've tracked some of these names, but let's say Piccadilly Agro. It's done do you track that one? It's done 40-45 crores of PAT in Q4. Looks expensive currently, but it's a liquor company which is growing at the rate of knots or more. And clearly the market seems to be liking it. Do you track this one?
Yeah, so I think it's under our soft coverage. So I think one of the brand has got a significant recognition internationally, and that is leading to this growth in the earnings. So I think the street is rewarding those numbers. So, but again, if the question is whether one would like to bet fresh money at the current juncture, I think slightly expensive on the valuation front. Better to wait for deep before adding this stock. And there are many other better managed companies, slightly bigger scale. So companies like Radico Khaitan, which is again doing a very fantastic job on premiumization. I think that can be one of the stock on radar if somebody want to play on a liquor company. And at the same time, on a summer portfolio, United Breweries, again, although trading at an expensive valuation, but looking at the way summer is panning out in India, I think even United Breweries is the one stock which one can look as an alternative to Piccadilly.
Okay. Yeah, so I was just pointing out Inox Wind, need to mark that. That's up 7.5% on that bonus announcement, 638 and counting. Well, it'll be really interesting to see the Q4 performance for both Inox Wind and Suzlon, and what quantum of, what gigawatt or what megawatt of capacities do they, or execution that they do in this quarter, because, and then the guidance that they give, because remember, for both wind, hydro, etc., the capacity addition plans are very, very high. By the way, speaking of that, hydro, bring up Patel Engineering. It was an NDTV profit exclusive yesterday that the QIP will be launched. The QIP has gotten launched and possibly completed. but the stock is up 1% out of the 6.5-7% up move yesterday. Quick one, Sunny here. Do you track a Patel Engineering or an Inox Wind, all proxies to this renewable energy theme?
Yes, I think Patel Engineering is a classical turnaround story where we have seen a massive increase in order book. I think QIP has opened today close to around 59-60 rupees. I think well placed, robust order book. So first round of re-rating is already done as far as Patel is concerned. Maybe from here on, one can expect a decent kind of return. I don't remember the order book right now currently, but I think they are sitting on a pretty robust order book at a current juncture. So that gives me a lot of comfort in terms of the earning visibility on Patel.
That is Patel Engineering. Lots of comfort on that order book is what Sunny believes. Well, some of these real estate names are also doing a little bit of positive play this morning. So from Oberoi to Phoenix Mills, counters aren't in a bad space. Oberoi is up 2.5%. Phoenix is up 3.5%. Aditya, has this caught your attention this morning? Any of these realty names that you would look to buy for the next few days of trade?
Definitely, Samina. There are a couple of stocks which stand out. I'll include a Godrej Properties as well in that list. So Oberoi Realty and Godrej Properties, these are the two stocks that definitely stand out. Talking of Godrej Properties first, I think makes a buy at current levels with a good support at 2,500 on the downside for a target of 2,700 on the upside. Oberoi Realties, that too can be looked at with a stop loss at 1,400 on the downside and for a target of 1,550, 1,600 on the upside. There's a bit of a pop in both the stocks, so I believe both the real estate stocks can be looked at.
Okay. Well, that's one more set of stocks. I was looking at the contributors to the index, and HDFC Bank is in the green today in a proper way. The top contributor, along with Bharti Airtel, being the second best contributor. It just shows how quiet the market is, to be honest. But even on the losing side, and L&T, Hindalco looking wobbly, otherwise not too many losers. But the surprise is IT really. And just before we, at least my final question, Aditya, large cap IT from a trade perspective, from Friday, 3 days on a trot now, ahead of the numbers, Tech Mahindra is in the green. We've seen Wipro do well since Friday and continue to do well, I believe, today as well. Infy is in the green as well. Is there a short-term tactical trade in large cap IT names?
There is, Niraj, to be honest, and we have seen that the mid-cap IT space is seeing a bit of profit booking and large-cap IT names are seeing buying. I'll add a HCL Tech to that as well. So the three stocks that definitely stand out for me are Infosys, HCL Tech and Tech Mahindra. HCL Tech definitely tops the list for me. At current levels also, I think there is decent upside in the stock, can test levels of 1,550, 1,600. Same is the case with Infosys as well. I think 1,550 is something that I'm eyeing on Infosys and Tech Mahindra too. And then given the fact that entire telecom space is doing well, who knows, maybe they can post decent numbers at Tech Mahindra. So 1,240 on the upside is what I'm looking at Tech Mahindra. So all three stocks, Infosys, HCL Tech and Tech Mahindra, I believe can be looked at and should see decent upside in at least a couple of weeks' time from here on.
Some of these Adani Group names are looking well placed this morning. I know Adani Enterprise is trading lower, but across the broader market, Adani names such as Adani Green, Adani Ports, Adani is not looking too bad. Sunny, anything in the Adani pack that you like? Cities put out a note that Adani Port is one of their favorite picks. Are you thinking on the same lines?
Yeah, I think within Adani pack, I would like to go ahead with the cement businesses, ACC and Ambuja, and as well as on the port side, Adani Port. So these are the three businesses which we like from Adani overall pack. I think all the three businesses are, all the three companies are well on track to report a healthy earning growth, driven by a very strong industry tailwind. And I think valuation also are slightly comfortable in all these three names. For the remaining name, I think valuations are sky high. I mean, no one can justify those numbers at a current juncture. So if I want to bet my money within Adani Bank, Ambuja Cement, which is again a holding company for ACC, and Adani Ports.
Okay. Thank you so much, Sunny as well, Aditya, for joining in today and giving us your thoughts and perspective and trades and ideas, more importantly. Really appreciate your time. We take a quick break on that note. On the other side, we'll be joined by the management of Paras Defense. Stay tuned.
Welcome back. You're watching India Market Open, and one sector that's been catching everyone's attention now for quite some time has been the defense sector. Of course, the other reason you're seeing the sector do exceptionally well over the last couple of months as compared to the index itself is largely on back of election play. Amit Mahajan, director at Paras Defense and Space Technologies, joins in to talk to us how things look. Amit, good morning. Thank you for joining us. Defense is a multi-year story. It's not 1 year, 2 years. We're looking at 5, 15, maybe 20 years from now. It's been a good run for Paras Defense, for the sector. I think what you're looking at about 25-30% sort of growth that you've witnessed. Margins are also looking healthy. You're at the forefront of this. Look ahead and tell me, over the next couple of years, do you think you could sustain growing at 30%, or it seems like that may be short-lived and there could be some downward pressure on those numbers?
So, firstly, thank you for having me on the show. Good morning. The defense sector today is going through a big paradigm shift when it comes to focus on Make in India. And if you are a manufacturing company in India, based out of India, then I would say 20 to 30% growth, which we always anticipate, is a very, very conservative number, I would say. And I'm not just talking for Paras Defense, I'm talking about any and every defense manufacturer who's based out of India. So Make in India is the way to go. This has completely made the whole market look inwards rather than we were looking very outward. We were importing all the technologies. We were having all the kind of, systems, and all the firepower which we had was completely imported. They were all being inducted without minimal indigenous content, or there was no obligation for an indigenous content. Now today, leave about indigenous content obligations, but the systems are expected to be manufactured, designed, developed, and manufactured in India. So you can imagine all that was being done outside India will be done in India. There is an impetus on the R&D organizations which are under Ministry of Defense to share the R&D and offload that R&D work also to the industry. So the amount of business that there are very few companies who can actually do justice to the requirements of the customer. Now, these companies are the companies who have been having legacy of projects to be done in defense as well as in space. And these companies will always get the first or the biggest opportunities in the sector. So yes, going 2 years, I would say I would extend that to 3 to 4 years, that we do not see any reason why we shouldn't grow at that percentage.
Well, you are in the thick of things, Amit. I just want to sort of move away from a multi-year story to what's currently happening now. And pardon me, apologies if, it's not a play for you. But with so much of geopolitical concerns, every other day we open the newspaper and somebody's bombing somebody's responding to somebody else. What does that mean for business for Paras Defense? Your export book is what, 16% from what I understand. Has it meant that more conversations are happening with friendly countries? Has it meant that conversations have now gotten converted into deal closures? Has there been any impact of what we're seeing in the rest of the world on the geopolitical side for your business?
So I have to be very frank that our export percentage has been limited. Our export of defense technologies has always been a plan B. The reason being, domestic consumption is so huge that, and also more profitable than exports. So Paras Defense has always given importance to first the domestic market, which is extremely potential. The geopolitical situation across the globe may not have fueled an export market in the Indian defense sector. But I would like to say that this has definitely changed the strategy of how military prepared, one, we should be, and secondly, how self-reliant we should be, such that our dependencies on any one particular nation is limited. We maintain friendly relations with the most of our partners, defense partners, but the reliance has been limited. And this, when I'm saying, the psychology of Make in India and self-reliance in defense technologies has been increasing, because seeing what is happening across the world, no one, you cannot have a dependency of your technologies on a particular nation, because tomorrow the geopolitical situation of that nation can change. So you have to be self-reliant and you have to be prepared for any eventuality.
Amit, good morning. Tamanna here, and just taking off from what Samina said, I think the big question right now is, do we have a shield or can we make a shield? Is Paras Defense working towards something like this? I think with what we've seen over the last week, Iran, Israel, etc., now nations are building those protective sort of strategies in terms of warfare. Can you give us a sense if things are moving in that direction, or is there anything interesting that you can tell us, of course, with all sensitivities in place?
I have to tell you that India has been a defense technology consumer for some time and has been amongst the top 5 consumers across the world.
Right.
So Indian defense definitely employs one of the best technologies in the world. India chooses to be covert for the reason that we are a nation who believes in defense and not attack. And we are always, without divulging information, I can tell you that India is very well prepared when it comes to its own defense. And I do not want to tell you what technologies we have and what we don't.
No,
but
please don't.
Paras Defense is not just involved into technologies that we have been doing in the past, but also is currently working on cutting edge technologies which will enhance the existing defense technologies. And that includes drone and counter drones. When I say drone and counter drone, it's detection of drone and then applying countermeasures on these hostile drones to bring them down. All of these technologies, Paras Defense is working on.
That's actually a great answer, Amit. And of course, we do not expect you to give details. I know it's a tough space to speak about. But if I can just get a little more from you on the January order, the latest order from the MOD. If you can explain to us how revenue accretive it is and give us a sense there.
So the January order, order book has been swelling for Paras Defense over the last 2 to 3 years. And this primarily, I would like to bring you back again to the Make in India concept. We have been Indian defense industry manufacturers for over 40 years now. Now, what has happened is, because of our legacy and our involvement into very many programs, not just in production, but also in development of some certain programs, you can see today those programs being culminating into orders. These programs have also got a lot of attention because they are all homegrown development, and hence all the industries which are involved into these programs. I would like to mention BrahMos missile. Now, Paras Defense has been with BrahMos from the first missile ever manufactured. So this legacy will continue. These order books would mean only solidifying our position in the industry and will continue the growth trajectory that we project.
Just on BrahMos, and I don't know, Amit, how much you can share on this, but I know that India delivered its first BrahMos to Philippines. We made this for another country. And you're right, we have always traditionally been an importer of defense technology. We didn't make enough of our own. Now we're making and we're exporting. Since you talked about Paras Defense in the context of BrahMos, I want to understand if you're going to see your export play or your export revenues increase in this sense as India moves towards a more, not just make in India, but make for the world as well.
I wouldn't play down export, but export always will become our plan B. Said that, I also want to mention that like BrahMos, we are building technologies for the world. Paras in itself is building and developing technologies for the world already. Now, Paras Anti-Drone, which is our subsidiary into RF and microwave and anti-drone systems, today is working with a French anti-drone company and developing next generation anti-drone, drone detection and drone jamming and spoofing technologies for a French company. So you can imagine if we are no more just a build to print kind of a nation anymore. We are developing technologies and the Western world is open enough to accept our technologies and then subsequently build their solutions on technologies which are developed in India. So we are no more just manufacturers for the world, but we will also translate and convert ourselves into a development nation for the various countries in the world.
Right. Amit, I don't know whether you can comment on this, but you've enjoyed very healthy margins, close to 28, 29%. As we go into FY25, those margins seem like they could be maintained. I'm asking you, I know you'll probably be reporting earnings soon, but just looking ahead, 28 to 30%, is that a healthy range for us to expect on the margin front from you?
You're right that I am in a silent period. So I can't tell you absolute anything, but Paras Defense has always focused on, yes, one is national pride, which we put it always on the top. And second is profitability, because the company, there are 600 families who thrive on us. So if we don't make profits today, along with our employees, there are people who have built trust on us and invested into our company. So
completely right. It's not just
and make sure that
it's your
we're always giving them what they want.
You're right. It's not just 600 employees. It's also your investors and shareholders that you need to keep happy. Just a quick follow-up, and I know a large part of your book comes from defense engineering. I think over 50% of your revenues is from there. Optronics is better margin business. In terms of your current order book, and of course going into 25 and 26, what is the sort of split you're seeking? And I just want to get a sense of that, because I also know drones is something the company has been focusing on, but currently it contributes very little to your top line.
So optics and optronic systems and defense engineering, if I have to split these into two verticals, they always go hand in hand when it comes to order book or execution. Now, in certain quarters, if defense engineering takes over, then you see that the next quarter optics and optronic systems compensates for it. On the yearly basis, which is how you should look at Paras Defense, they almost go touch and go 50-50. As a company, obviously, as a strategy, we would want optics and optronic systems to go beyond 50% such that the profitability improves. Said that, drones market is a market which is a fast moving market. If you ask me, it is the most profitable, I wouldn't say yes, because the competition in that sector is growing by the day or by the hour. What we are really banking on is our anti-drone, that is the counter-drone, drone detection and drone countermeasures. That technology market, which will be really, really a market to look upon. And that will also be very, very profitable when I'm saying this. So looking at the strategy, we would always want a healthy optics and optronic systems. They should lead the revenues as well as profits. Defense engineering gives us a fast moving orders, and then anti-drone systems and technologies should give us the long-term growth as well as profitability.
You know, Amit, very interesting. Talking about shareholders and wealth creation, as we've been in this conversation, your stock actually trades at a day's high point. It's an intraday move, but nevertheless, in the last few minutes, it's picked up steam, trades the gain of 3%. So along with the 600 families that depend on you, your shareholders are probably pleased you had this conversation with us right now. But good luck. We'll hopefully see you when you report your earnings. For now, the going is good. Paris Defense indicating that 30% growth year on year is actually being conservative. So don't be surprised if you see positive surprises coming from their stable. We'll take a break. We'll come back. We'll talk to Mahindra Logistics. It's been another rough quarter after a very quiet year for the company. All that and more on the other side, so stay tuned.
All right, we're talking about results today, and just before we go into Mahindra Logistics, let me quickly mark Paris Defense. So we spoke with the management short while ago, and stock near its day's high right now. Ram Praveen Swaminathan joining us now, MD and CEO for Mahindra Logistics. We're talking about their Q4 numbers. A bit of a rough quarter, I would say. Revenues were up 14%, but EBITDA down 11%. At 56.6 crores versus an estimate of 60 crores. Margins also squeezed to 3.9% versus 5%, and a net loss of about 11.9 crores. I'm speaking now with the MD and CEO, Mr. Ram Praveen Swaminathan. Welcome. Thank you for speaking with us here at NDTV Profit. Can we get a sense of where the pain points have been? I'm seeing one-time sort of a provision for 10 crore rupees as a doubtful receivables. Can you share any more details on that? And is that what has sort of skewed the picture? I think you're on mute, sir. Can you say something? I think you're on mute. All right. I think we need to try and get that audio sorted before we come to Mr. Swaminathan on what has been happening with that company. But, this definitely seems one very clear reason why you've seen a sort of a hit on the profits, because there was a one-time provision for doubtful receivables of about 10 crore rupees. There were IT charges of 2 crore rupees as well. So at net you have a net loss of 11.9 crore rupees versus a net profit of 0.2 CR last time round. So not that there was too much of a buffer, but this could be one of the reasons you're saying. If you take that out of the picture also, not real growth being seen there at any point. What else has been happening for the company? Well, their guidance say they aim to become a 10,000 crore rupees logistics service provider by FY26. They're on track to EBITDA break even as well. I think we have Mr. Ram Praveen back. Sir, can you hear me?
Yes, I can. Good morning.
Good morning. All right, there you are. Let's start with the numbers and what's happened with the profits. Do you put this down to those one-time provisions, and can you give us more details about it?
Sure. I think, it's actually a fairly robust quarter from a revenue perspective. After a kind of mute first half, we have got back to double-digit growth. Revenues grew by around 11% year on year during the quarter and grew sequentially as well. From an earnings perspective, our business is in two parts. There's a core business, which really is our 3PL and the global cargo business. And that business was pretty flat in terms of earnings. It was impacted by one-time charges, which I think you spoke about. Those charges were on account of several discontinued accounts. We exited some accounts in the commodity space some time ago, and we essentially reviewed those and took a charge towards those. We also went through a significant IT transition this year, and we had an incremental cost in this quarter for those. So both of those are non-recurring charges, and set off for that, profits in the core business is actually up 4% if you adjust for that. The second part of our earnings story really has been the express business acquisition we did some time ago, and that's an investment we are making from a long-term perspective, and we're scaling that network up, and that business actually had a really strong quarter in terms of earnings. Our losses in the business actually came down by around 34% on a quarter-on-quarter basis, and so that's been a really and we are we believe well set to achieve EBITDA breakeven in that business by the end of the first half of this financial year. So while I think peeling the numbers, actually we felt it was a fairly good quarter in terms of underlying earnings, and we have some pretty strong tailwinds going into the rest of this year.
So Swaminathan, I'm just going to take a follow-up question at Tamanna's, and you indicated that after a very quiet last 9 months, fourth quarter has seen a little bit of an uptick in terms of top line. I believe you've set yourself a target of 10,000 crores by FY26. You want to tell us the glide path for it? Because even at a 14-15% growth, that number seems a little out of reach, at least given the current situation.
I think there are really three parts to that story. Samina. I think the first one is our core third-party contract logistics business. We do expect that to grow in the mid-teens. As I said, it was important for that growth to come back. You must be mindful that we have three smaller businesses: our global cargo business, the B2B express business, and the last mile delivery business. These were inorganic acquisition-led businesses we have entered over the last few years, and those businesses are all in a growth phase, and therefore we expect those businesses to grow at higher than teen level over the next 3-4 years. And then of course there's a mobility business which actually still is below pre-COVID levels, and we expect that to recover over the next 3-4 years. So in our math, the 10,000 crores is still pretty much in line of sight. We expect to be able to scale the business, especially on the back of the newer businesses and the mobility recovery quite strongly. We might look at more quarter here and there, but I think we still believe we are in line of sight for that.
So Swaminathan, one quick question on margins, and those have been seeing again decline quarter on quarter, year on year, close to 4% now. Is there any sort of upside risk to margins in FY25?
As I said, I think there are two parts to it. I think on a consolidated level, we have the core business, which has been there for some time. That's where we are historically being strong. And those businesses, sequentially, were actually flat on margin if you take out the one-time expenses, which were there. And those are non-recurring charges, which will not be there going forward. We're absolutely confident about that. I think the express business has been the large carry, and that we look at it independently as a significant long-term investment for growth, and both on a standalone basis and synergy provides the rest of our company. And that business, has been the larger impact in terms of our earnings over the last few quarters. Now that business is now in a clear uptick. The losses declined by 10% in Q3. They've declined by nearly to 30% in Q4 at an EBITDA level. So we feel pretty good that over the next 2 quarters, as that turns to EBITDA breakeven, you'll see a fairly big flip at a consolidated margin level.
So, just one last question, Mr. Swaminathan, and a little forward-looking. What are the sort of segments that you expect to fire going forward, Q1 and beyond? For example, your last mile delivery did fairly well this time, not so much freight forwarding, etc. What are those segments that you think will, boost you up to your guidance?
I think from a segment level, clearly our business segment level, contract logistics and last mile delivery, I think, are doing really well from a growth perspective. I think the forwarding business has difficult challenge in global macros. So we hope growth will come back, but there are some challenges there. I think in terms of end segments, for us, automotive and FMCG have been strong over the last couple of quarters. We've had good order intake. We expect that e-com now has bottomed out, and we are seeing an uptick there as well. It was a strong quarter in e-com in terms of recovery, and I hope we'll sustain that in terms of more penetration.
What is the revenue size you expect e-com to increase to?
No, actually, we don't give guidance, but we do expect our overall third-party logistics business to grow at that mid-teen level. That's kind of what we've always aspired to do. Last year was a bit of a challenge, but we expect to be back on track this year.
All right, thank you. Thank you for that, Mr. Swaminathan. That was the MD and CEO of Mahindra Logistics talking about the quarter gone by and putting down those losses and the margin squeeze, the profit losses, actually to one-time provisions. With that, it's a wrap on India Market Open, but stay tuned. Up next is Talking Point.
I pledge to vote and encourage all my colleagues at Brokerage Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Thanks for tuning into Talking Point. I'm your host, Niraj Shah, on a day when the broader markets are showing exceptional strength yet again. The case for a chat with our guest today, and there shouldn't be a surprise considering his views in the past that we're talking about a few of the things that we're talking with him. One is the change of trajectory of rate cuts going to have an impact on deposit growth and on market-wide valuations. I think that's a conversation that we'll have. is urban consumption, while has looked good, can it pick up further and will it show in the staple results? Because it's a week of very important FMCG numbers. And is telecom no longer being a duopoly, leading to a much anticipated uptick in the fortunes of everything related to the sector? I think we'll talk about all of this and more with Ashwini Agarwal of Demeter. He joins us right now on the show. Ashwini, great having you. Thanks for taking the time out. Hope all is well.
Good morning, Niraj. All is well. Thank you.
And Ashwini, great to have you. Can I start off with this, Ashwini? I mean, this is now the 6th or the 7th time in a row that we're seeing the market climb the wall of worry. The reasons may dissipate, the reasons may change, but every single point of time that people have called this market to look very, very wobbly and worrying, right? And for the right reasons, I might add, right? This market seems to come back and climb the wall of worry. Is this, therefore, while expensive a market, remain a buy on dips market?
Niraj, it would appear so. I mean, if you look at the market trajectory from the bottom of COVID, there was only one sort of meaningful correction that you saw, which started sometime in June or September 2021, and then lasted through till March of 23. And even that period, if you break it down, you saw one big decline from September 21 to June 22, and then again from about Jan 23 to March 23. Jan 23 to March 23 was also a fairly mild correction, though, that was the point when the whole Adani stock and Adani group was under a lot of pressure. But barring that, there has been no meaningful correction. And partly the reason is that the macroeconomic outlook for India has never been better. I mean, if I look back at 32, 33 years of my investing career, I think long-term prospects for India have never appeared to be brighter. I mean, you don't have any macroeconomic imbalances. You have a very pro-business policy tilt. And I think, on a global stage, India is set to continue to grow well. So, what's happening is that the domestic investors have kind of understood that this is the long-term trajectory for India and this is how it's going to go. So use every dip to accumulate, and further still, don't just bother about the short term, just keep investing for the long term. And the mutual fund flows are telling you that. So, a value investor like me can keep, despairing that the bond yield to equity yield differences are at all-time lows, and all indicators are telling us that the market is super expensive. But, I really don't see how there is going to be a very deep correction. You could always have a 8 to 10% correction, events for which will unfold as we go along. But I really don't see how it's going to be much deeper in the current framework, unless, of course, elections deliver a surprise or something goes wrong in the rest of the world, then we'll have to see.
Yeah, interesting point, Ashwini, because I remember you also, I mean, yes, you were rightfully pointing out, right, that if you look at on a valuation benchmarks, I mean, it's difficult to make a very convincing large call here. So, Ashwini, what have you made of the results season thus far? Because IT selectively is sulked, but maybe it was in the price, and the start of the financial services reportage, whether the quarterly updates or the actual results, has been okay.
Yeah, I think that's the right word. It's okay. There's no positive surprise. And yes, that can turn out to be a headwind for the market, because if you recall, both the September 23 quarter earnings in aggregate and the December 23 earnings in aggregate surprised the street. They beat the consensus numbers. And the beat was